Hi, I'm Kriti and welcome to Corporate Lens. Today we are diving into a topic that quietly powers everything from your fuel costs to India's trade standing. How RBI manages the rupee and builds our forex reserves. So let's decode this under 5 minutes. So, why does the RBI intervene? When the Indian rupee depreciates too much, it makes the imports like oil and electronics costlier, and that pushes up the inflation. On the flip side, when the Indian rupee appreciates too quickly, the Indian exporters suffer because our goods become expensive abroad. And that is why RBI intervenes, buying or selling US dollars in the market just to keep the rupee stable. Think of it like a cruise control on the winding road, not fixing the speed, but keeping it safe and steady. Let's look at the two key moments: the taper tantrum in 2013, when the US signaled an end to ease money, foreign investors pulled out of India. The rupee tanked. The RBI sold billions in dollars and raised interest rates to calm the panic. And in 2022, the Ukraine war, the oil prices surged, imports got expensive, and the rupee fell. Again, the RBI sold dollars to cushion the fall and kept inflation in check. So, what happens to forex reserves? When RBI buy US dollars, it adds to India's forex reserves, which is a mix of foreign currencies, gold, and IMF assets. But when it sells dollars, then those reserves shrink. Currently, India has a healthy forex reserve of $658 billion, which is enough to cover months of imports. However, there is a delicate balance because overusing reserves can drain our defenses, our ability, our financial ability to handle external shocks, while under usage of reserves can lead to rupee slide dangerously. So every RBI move affects inflation, trade competitiveness, and liquidity in the system because too much intervention could pump in a lot of money in the market, causing inflation, and too little can cause panic in the market. So the RBI is not trying to set rupee at one level, but instead it is trying to smooth the ride. That way, your businesses can plan better, borrow smarter, and stay resilient among global shocks. So next time if you hear RBI sold dollars or forex reserves dipped, then just know it's a calibrated approach to keep the economy stable. Because after all, healthy reserves and stable currency is equivalent to strong business confidence. If you found this video helpful, then do share, like, and subscribe to Corporate Lens for more sharp insights. Thanks for watching, and I'll see you in the next one.